Good morning, everybody. How are we doing? It is settlement day for the SPX, so I've been kind of paying attention to that. If you didn't know, uh, the third Friday of the month is big settlement in the SPX. So what is big settlement? Well, that's the real active contracts. Now, if you look at SPX as a whole, we're going to do like an actual lesson here today on trading a little bit, folks. Um, SPX options, they're relative to on a notional dollar value, they're the biggest equity contract in the world, and so really everybody pays attention to what is going on with um, SPX. I mean, the average daily volume on SPX is about 1.3 million contracts. The average daily volume on SPY is about 2.7. So SPY is twice as busy, except SPX is 10 times bigger. So SPX does the SPY equivalent of about 13 million contracts a day. So when we get to these kind of standard settles, so July AM settle, which is the big settle, August settle, and then of course the ones that coincide with futures, which are called quarterlies, are even bigger. So serials are the ones that take place in between the quarterly contracts. So quarterlies are March, June, September, and December. The serial months are January, February, April, May, July, August, October, November. And they can be absolutely busy, but the quarterlies go out years and years and years. If I go to SPX, I can trade a December contract. Wait till you hear this. SPX already has a billion contracts that go way out, but I can trade out to December of 2021. So not just January of 2021, December of 2021. So a full year later than the leaps and regular equity contracts. And then they've already listed the quarterly contracts for January of 2020. So we have a March, June, September contract for next year, whereas most contracts just have those leaps. So that's why there's so much business in those quarterly contracts. Plus the fact they coincide to futures, the S&P futures. So people pay close attention to SPX, and it can be a little funky. So, for instance, the settle for SPX today was 3,806. Now, that's not particularly important, except for the high in the day for SPX is 3,006. So, how do we settle higher than we than we trade? And the answer is that it's based on the opening print of every stock, not where the actual index is trading. So when stocks haven't opened yet, the index can have kind of an implied value of those, but until they actually trade, until all 500 stocks actually trade, you don't have the actual settlement price. So the settlement price can be higher than SPX trades, and it can be lower than SPX trades. So that's why settlement for SPX and especially VIX is something that you need to be really aware of what you're doing going into it. Just like anything, to cook, you need to be aware of what you're doing, whatever. But I would say that that's really the key is that you need to have a really clear understanding of settlement procedures and how SPX works in order to trade into it. I had a very small position going into it, and it worked out in my favor because it was bullish. But never would I put up, and I've been at this for almost 20 years, and never would I take anything with the tiniest positions into VIX settlement or SPX settlement, because you're really just spinning the roulette wheel. You're not trading smartly, and if you're not trading smartly and you're not trading a known, right? Just the same reason I don't trade. I really don't trade a lot into earnings. I trade before and after. If you're not trading a known, then you're not really using your knowledge up here to your advantage. You don't have your edge. So it can be kind of fun to look at settlement. And if you're trading for fun, be my guest. But if you're trying to make money, do your best and maybe avoid settlement. All right. We've got more earnings this morning, and feels like we're gonna melt higher today. So enjoy the vol melt, and I will hope everybody has a great weekend. And I'll be back with my trade idea of the week in a few. Have a great day, YouTube.